All right, how's it going, everybody? My name is Antonio, and I spoke to Tyrone Brightonback on November 13 about Aris's recent quarterly results and our resource update. Aris is, if you didn't know, a gold producer with an operating mine in Colombia, another mine currently under construction, also in Colombia, and then there's two other development projects, one in Colombia and one in Guyana. I'm not going to do a full company overview here because I had an interview with Tyrone for over an hour and a half a while back, a couple of weeks ago, so I'm going to link that below if you want to learn more about the company. But they trade on the Toronto main board under the ticker symbol ARIS and on the New York Stock Exchange under the ticker symbol ARMN. Now, who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy or sell anything. Instead, it will be a casual talk between two people on the internet. And if you haven't been burned yet, you're not supposed to blindly trust strangers on the internet. For as far as you as a listener or a viewer are concerned, this is going to be a conversation that's general and impersonal in nature, and it's definitely not a conversation that you want to use as independent research because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. There's been a couple of disclaimers on your screen. I would suggest you go back to the first one and you also pause the screen and read the second one that is on your screen right now, because the mineral exploration, development, and mining industry is among the highest risk industries out there. And you are going to lose your money unless you do more research and visit setterplus.ca, where you can find the company's official filings. I also want you to understand that Aris pays for content production. This is not free, but they do not get to see any of the questions beforehand, and they don't get a say in what ends up in the final video. So with that out of the way, let's listen to Tyrone. All right, Tyrone, since we last spoke, you've had two rather big news releases, maybe. Well, I'm not going to go over all of it. Why don't you go over it? Give me the gist of it. What's happening with Aris?
Sure, sounds good. It's nice to be back and update your listeners. So we did have two big pieces of news. The first was a resource increase at Segovia, and this was a bit of a surprise. We essentially doubled our measured and indicated resource, and that's, I think, a pretty earth-shattering piece of news given it's our foundational asset. It's the main source of our free cash flow. So we can dig into that through this call. Secondly, we reported our Q3 financial results. Recall we had pre-reported production. We knew August was a record month, and so we were able to convert that production into, I think, a pretty strong financial results. I think the bottom line is things are turning around at Segovia. We had some real operational challenges in Q1. Some of those were external, like an explosive shortage in the country. And we've been able to keep our cash position flat from Q2 to Q3, essentially while drilling at Segovia and essentially starting our new build at Marmato. And I think in this market, that's a pretty good proposition for shareholders.
Right. There's a couple of things to touch upon there, and also the financial situation I want to talk about. But why don't you talk to me about why you even came up with this resource in the first place, because you're also trying to convert resource to reserves eventually. And so how does this make sense strategically for the company now?
Absolutely. So it was a surprise piece of news, I would say. It wasn't that big of a surprise for us. So when we took control of the asset in September, when we closed our merger with GCM, one of the first things we did was a big audit of the estimation methodology, how we calculate the resource. And stepping even further back for a second, Segovia has this, I think, completely unfounded reputation of having a 3 or 4 year mine life. But it's had a 3 or 4 year mine life for almost a decade now, right? Mm-hmm. And the reason is it's narrow vein, okay? You're drilling a 100-meter hole to get a 1-meter intercept. So it's very expensive to drill this thing off at 10-meter centers and map out a 10-year reserve life. The asset's been mined in one way or another for 100 years. We know how the resources convert. So we've been pretty comfortable converting the resources to reserves year after year. And that's sort of been the trend for the last 4 or 5 years, okay? That being said, when we got in there and did an audit of the resource, what we found was that the way the vein was modeled, because when you build these resource estimates, the first thing you do is draw a line around the vein, okay? Then you use a mathematical algorithm to convert the assay data inside that vein to an estimate to tell the market how much gold is there. And that's a bit of a dark science. I used to do that for a living as a resource geologist, so there's a lot of levers you can pull. And what we found is that previous operators weren't snapping to samples. So what that means is they were drawing the vein kind of roughly where it should be, rather than snapping to an actual a sample boundary in space. And so what we found was when we did that, these vein shapes were closer to nature. They were more realistic. They were more precise. Okay, and because we're doing that, we weren't leaving high grade outside the vein, and we weren't dragging waste inside the vein. And so because we have a high cutoff grade, we're able to increase the tons and increase the grade, which means the overall gold content went up by 100%. So usually when you have a more discrete vein, okay, tons go down, grade goes up, and gold's kind of the same or up. But because we have such a high cutoff grade, we're actually able to increase all of these metrics. And so the obvious question from the analysts, the investors, many of whom have a technical background is this is great, but what does it mean for reserves? Okay, we're mining reserves, not resources, right? We're a producing company. Reserves are really important. And the difference to remind your listeners, the difference between reserves and resources is a resource just tells you what's in the ground. The reserve tells you what can be extracted, okay, through geometric mining shapes. And so there's always loss. You always get a bit of dilution, but we're starting with a much bigger number. So I think we'll have a decent conversion rate. I'm going to guess over 50%. I think our COO on the conference call, if you read the transcript, he said a larger number, but look, that's a very healthy increase at our most important asset, right? So I think one of the pushbacks I get when I'm pitching the stock is, well, you trade at 2 times cash flow because you have a 3.5 year mine life, right? Well, now clearly we've got a longer mine life, and we've addressed this massive pushback. And so I think it's good work by our technical team, and I think it's just an evolving understanding, right? Like the more people that look at this ore body, the more data we have, because we also did a big drill program. Like, let's not forget, we drilled 85,000 meters of core, so we had new intersection points to help us draw that wireframe. So I think it just demonstrated a better understanding of our ore body, and the market should appreciate that.
Well, the market should appreciate it, and it did for a while. So your stock went up on good volume, I believe, on the day right after that, but it has since given all of it back and then some. So what do you think the market wants now from Aris to make those gains sustainable, basically?
Yeah, look, I mean, the news was well received. I think the stock was up over 10%, if I remember correctly. Yep. It's kind of where it settled. We had a couple of strong trading sessions. I mean, verbally, the feedback's being good. I think there is some skepticism saying, hey, let's see what the reserve looks like. But also, don't forget, the gold price from when we put out that news to today, I think, dropped about $70 or $80. And I think in that market, any news just gets washed over by a tide of selling. I think we're in the market where the ability of news to move the market it gets tougher and tougher every day. But it all depends on your timeline. Like if you're owning the stock for a year or years, not quarters, right? You should view that as a buying opportunity, because we've increased the fundamental value, like the number of ounces in the ground, fundamentally, and you can buy the stock before that news came out. So to me, that's a buying opportunity. And then I also think some of the analysts are maybe waiting for the reserve number, right? And also we've put out the press release, but we don't have the technical report, right? And there's a lot of changes going on here, a lot of math, and it would be nice to see some sections of the block model, some sections of the vein. And so 45 days after the news goes out, you have to file the technical report. And that technical report will include the new reserve, a lot of details, a lot of images. And I think if you're a big investor who wants to place a big stake, why not wait 45 days, right? And actually dig into some of the assumptions we made.
Yeah, good point. How many meters of drilling is going to be included in that report? Because I know you budgeted for 84,500 meters of drilling, but I suppose it's going to be more. So how much drilling are we talking about?
Yeah, so we had a budget of $17 million, which we estimated would allow us to drill 85,000 meters of core, basically. Okay, and because we've been more efficient, costs are lower than we forecast, which in mining, is rare, but this was a good outcome. We were able to basically do most of that 85,000 meters by the end of Q3, and so it looks like we'll now be able to do over 100,000 meters. And so remember, that's a combination of infill, targeting near high impact potential ore sources, So yeah, we're just getting more and more confident in this ore body every day. So by the end of the year, I think we've done 100,000 meters, which is a healthy drill program.
At that same budget of $17 million.
Exactly. Yeah. So we're getting more out of our budget, and I think as we improve the development underground, we can start doing more drilling from underground, right? Because the problem with these ore bodies is because they're narrow vein, you really only want this 1 meter interval. Like that's the money shot, right? But you're drilling a 200-meter hole, and you got to pay the diamond drillers to drill that long, deep hole to get this one valuable intercept. Whereas when you're underground, 200 meters of drilling could give you 5 pierce points instead of 1. So this is the kind of ore body that we will eventually drill primarily from underground, I think.
Right. Okay. And so, but you've been efficient with exploration, but looking at production itself is up. So you noted record production, you said that too. But cash costs are also, on the production side, are also up by about 30%. What's going on with that?
Great question. You always do a good job of kind of preparing for these interviews and digging into our numbers, so I appreciate that. But there were 2 things. The first was the Colombian peso appreciated against the dollar. So it's kind of turned around. Like last year was a brutal year for the peso. The currency's become a bit more valuable, so that increases the cost of our inputs, reagents, steel, fuel, etc. The other big thing is, as you know, Segovia is, I think, unique in that almost half of production comes from artisanal miners. That's a very interesting situation because, remember, a lot of the time they're not depleting our resource. Some of these, like I said, artisanal, the correct word is artisanal small-scale miners, because they're our partners, right? They're actually pretty sophisticated. They're very good at what they do. They deliver very high grades. Sometimes they mine our concessions, so our resource or our reserve. Sometimes they mine their own reserve. So they're providing production, but they're not depleting our reserves, which I think is a pretty interesting situation. The flip side to that is, to be true partners, we have to give them exposure to the gold price. And so something we've done at Aris as of Q2 is we report owner-operated and partner-operated costs, just to give investors and analysts more disclosure on our business, okay? And because we give them exposure to the gold price, if the gold price goes up, it costs us more to buy their material. And there are a few other mechanisms like grade that can affect what we pay to buy in. So those were the 2 big drivers. So yes, we're up over Q2, but I think we're still a lowest quartile all-in sustaining cost producer. And the flip side to the partner operated model is you basically have like half your business is a fixed margin business, right? So if gold goes to 3,000, we're giving up a lot of that leverage, to some of it to our partners. But it works both ways, right? So it's a fixed margin, but it's a 40% margin, which I think is a pretty good for a mining business. The other half of our production at Segovia, fully exposed to the gold price. Marmato, fully exposed to the gold price. So it's kind of a unique asset, and it was partially why we saw a slight cost increase.
Could you maybe expand more on sort of your the production that comes from what you call partners? And again, we talked about that a little bit last time, but talk to me about sort of the predictability of this partner operated production, if you will. When do they produce more? When do they produce less? How much of it can you influence? And also, let me tell you why I'm asking this, so that you know how to target it. Maybe it's because I'm just wondering, how predictable can your earnings be? Because building out a mining company, you ideally want your income to be predictable and to know how much you're going to gain. So that's why I'm asking.
That is a fantastic question, by the way. So the first thing is giving people the disclosure, okay? Because it is unique. There are a lot of mines like this, right? And so we've given that disclosure in Q2. And so I'm seeing the analyst consensus narrow. That's important, because if consensus is all over the place, then you're never going to hit the numbers, right? The second thing I'll say is, I would encourage you to go through the financial results for Aris, at GCM, anything on Segovia for like the last 3 years. It is a remarkably stable operation. And I think the reason for that is because of this artisanal source of ore that doesn't deplete our ore body, you have a stockpile, okay? And when you visit a mine, or you talk to someone who's involved in the mine, the worst situation you have is when ore's coming out of the mine and being jammed in the mill because the mill's hungry and you're just struggling to feed it, just throwing in whatever you can get. That's how grades go like that. When you have a 3-month stockpile inside, you can blend it and it's ba-boom, 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 right? and Segovia has been really stable. I definitely think it's one of the most underappreciated assets in the space. And going back to our artisanal partners, the model, like there is a mathematical formula on how we pay them. It's based on grade, gold price, a few other things, right? Too complex to get into for this call, and it's taken a few years to get the arithmetic right, like a model that works for them, right? And you want to incentivize them. And basically, what it boils down to is sort of a 40% margin to us for half of our ounces. And so I think it's very simple. When you model our business, 40% of our ounces have a 40% margin. The remainder of the production is exposed to the gold price. And I think that's the way to run a model for Segovia. And I actually get it. Net helps with stability.
Okay. Yeah. Well, it does make sense when you put it that way. It's I was also maybe wondering about how much control you really have over the people there.
So that's another great question. So that's the risk, really, right? Is that these guys decide one day, okay, we no longer want to deal with Aris. We're going to do our own thing. We're going to work with someone else. But first, you need a mill, okay, and a tailings. I think we have really the only first world processing tailings capacity in the region. And if you don't have that capacity, you're getting 40% recovery, not right. Like the traditional stamp mill is like 40-50% recovery. They're basically using gravity, probably a bit of mercury to get the gold out. It's dangerous, right? People take massive risk. It screws up the environment, so they attract the authorities. Whereas with us, they don't have that issue. So I think it's just easier to sleep at night. And we're actually paying them a fair price. We're giving them exposure to the gold price. And so how do we mitigate that risk? I think it's by being a good partner, by giving them a share of the gold price upside. Like if gold rips to 3,000 and we were trying to increase our margin, like that's not going to work. So you have to be a good partner. And this is where I give our predecessors GCM full credit for kind of pioneering this model. And it started with one artisanal small miner partnership. We now have over 60. So it's just, I think, being a good partner and our partners watching what we do rather than what we say. But there is always a risk, right? Like they're going to have their own cycles, their own business cycles, family transitions of their assets, politics, stuff like that. Yeah. So there is a bit of risk to the artisanal sourced ore. But also a lot of the artisanal sourced ore, they're actually mining our tenements, right? So we could always expand our workforce and get some of that material ourselves. They're better at us than mining some of these historical pillars and these higher grades. But I'd say not all of it is coming from off concessions.
Okay, and that's Segovia. What else is happening at Marmato? I think that's also obviously an interesting part.
Yeah, so Marmato, we got a permit in July, right? And I've had a few calls from analysts or investors saying, okay, well, what other permits do you need? And so when is Marmato fully permitted? And my answer is no, we're building it. Okay, so earthworks on the road and other surface infrastructure started in September. You need to upgrade the roads and the bridges and just the surface layout before you bring really big mining equipment. So we spent 17 million in the quarter at Marmato. So it's going ahead, and I think that remains the biggest catalyst for this company, is just bringing that asset online. So it's on schedule. I think what's interesting there is we're able to start at Marmato, okay, spend quite a bit of capital, and yet our cash stayed flat quarter to quarter. So the spend's going to go up, but don't forget we have 120 million coming in from Wheaton. And the asset's more than funded. There's like a $80 million buffer. So there's no risk there, but we're off to a good start where Segovia is actually covering the build cost for Marmato. Right.
And looking at full year, you think you're going to get between that range? What was it, 220 to 240,000? You think that's all on schedule and all that?
Yeah, we did update our guidance, and I think we'll be good to go on our full year guidance, at least on the production side. And we haven't changed our cost guidance either. So yeah, we're still saying we're going to hit our guidance.
Right. Okay. And then lastly, Soto Norte. Didn't talk much about that. There was a short update in the MD&A. What's going on there?
Yeah, I'd say the eagle-eyed investors who went through the transcript would have heard Neil talking about production from Soto Norte,
Mm.
from a group of artisanal miners there called Cale Mineros. Now, remember, there is traditional artisanal small-scale activity today at Soto Norte, and they're getting the typical 40-50% recoveries. There's all the usual problems, taxes, safety, environmental. And so we're already in discussion to potentially move some of that ore to Segovia. So again, that would be cash flow, production, without depleting a reserve. Because they're not mining Soto Norte, the deposit, they're just sort of in the region. And I think if we can do that, it will further boost our credibility in the region, and gets us a step closer to that asset being permitted. A reminder, we intend to submit a new ESIA later this year, early next year. I typically say, look, I think 2 years is a conservative estimate of processing time, right? But Buritica got permitted in 10 months. So that's kind of the bookends. But right now, we get no value for that asset. So I think near term, market's waiting for us to build Marmato. We're actually installing a camera at both the plant and the portal. So there'll be a gallery on our website where you can actually watch equipment showing up and us digging and pouring concrete. And so I think that'll be really good. And then Soto Norte, we're just doing our thing.
Okay. And then I suppose just one last thing, looking out into Q4, if you get to the upper boundary of that guidance, 240,000 ounces, what are you thinking in terms of EBITDA?
So look, I mean, year to date, we're at 90 million EBITDA unadjusted, I think. So if we could get to 120 for the year, like the full year, I think that'd be a pretty good number. I mean, obviously we don't control the gold price. I'll tell you, October started off great. It was looking pretty good. And we haven't changed our guidance. So I think we had Q1 was terrible, external factors. Q2 better, still not where we needed to be. Q3 I think was a fantastic production quarter, okay financial quarter, and I think in Q4 we need to show more of the same. And I think that's one of the biggest catalysts for our stock is just consistent earnings, consistent cash flow generation in this market. That's going to be recognized.
Well, I think I've been through everything I wanted to ask. I'm looking forward to see resource to reserve calculations, and I'm here for an update and looking forward to it. Anything else that you came here hoping to talk about, but I'm failing to bring up?
No, that's it. You always do a lot of great research. So thank you for the time and the interest in the Aris story. And finally, I'll say is anyone can reach out anytime. And we'd love to chat more about what we're doing there.
I'll have your contact information up on the screen right now. If anybody wants to reach out, feel free to do so. And yeah, thank you so much for being here.
Okay, thank you, Antonio.